Hi, hello, good morning. Welcome to Success VIX Group. Today I want to show you how to set up for volatility. How to set up for volatility 75 index. So we'll start from scratch. This is a simple setup. Now the first thing to change the candle color. You click on your screen. You click on this settings icon. This one, you click on it. You see color. You scroll down, you see color. Click on color, and then you see bar up. For bar up, you use color green. 1, 2, 3, 4, 5. The fifth row. 1, 2, 3, 4, 5, 6, 7. Seventh column. You choose that. For bar down, you use red. The third row, third column, choose red. Likewise for bull candle, you change it from white to green. The bear candle, you change it from the ash to red. And you are done. You click on done. Voila. You see, this is what you will have. Then the next is to set up the indicators. Now for these indicators, number one, you set the moving average. And the first moving average you have to set up is moving average 60. Whatever you have here, change the period 60. The period to 60. Then the shift remaining 0. The method is simple. Apply to close. Then you change the pixel to pixel for the style. The pixel to pixel. The color green. I mean the green is the third row. 1, 2, 3, 4, 5. No, third row. 1, 2, 3, 4, 5, 6, 7, 8. The eighth column. That's where you get the green. Then click on done, and you will see this is it. This is the green 60 MA. This is it. That's the green 60 MA. That's the green 60 MA. The next is to you click on this F function to add indicators. You click on this F function. You click on F plus here. They select moving average. The next one is 360. Now the function of that 60 green that we talked about, the function of that 60 green is to tell you the recent trend correction or reversal. It tells you the recent trend correction or reversal for this 360 simple moving average. The method is simple. Apply to close. The color is red. Scroll up, change this color to red. Third row, second column, red. And then you click on done. But you see it. This is it. Now the red. This is the red. This is the red. This is the red. This is the red. You see? The function of this red 360 is to tell you the main trend, show you the main trend. You see, this is the main trend. So as you can see, when price above this red, that means it's an upward trend. When price above the red, it's an upward trend. Shows you the trend. So when you see any point that this red and green crosses, it shows that the upward trend is confirmed. So it's confirmed. Once this green 60 MA crosses the 360 MA, shows that the upward trend is confirmed. You see it continue to go up until there's a cross again. Can you see? Once there's a cross, the trend has changed. You see? I entered when it was up. I entered when it was buying, but now it has started selling. But no problem. We see buy according to daily trend. So you see now, it has crossed now. So it will sell for a while. But later now, you see the green. I said the green tells you the trend correction. Normally, see from this now, you 360. It shows that the trend is a sell. It's trying to curve down to show that we want to reverse. But again, look at the green. It's already turning up to show that, okay, very soon we are going to expect an upward move. So those are the functions of these 2 MA. I hope you understand this. Then I want to add more. Now I want to add 4 new MAs. Those 4 new MAs are let's edit the moving average again. Then change the period to 120. Simple. Set to method is simple. They apply to close. Then the color is graded gray. Now we have these 4. We have different shades of grays. So we start on the list. The first row 1, 2, 3, 4, 5, 6, 7, 8. The 8th column, the first row, 8th column. The first gray. You click on done. This is it. Well, let's use that one. It's not showing clearly. Let's edit it. Let's use the higher first to the 8th column, 7th column, or 1, 2, 3, 4, 5, 6. Let me first to 6th column. This it's a bit brighter. You can see it. This is it, the gray. Then let's add the other ones. Moving average, F plus moving average. Then click on this. Change this one to 180. Then click on done. You see the second one, 180. No, actually, I didn't change the gray. It should be a bit lighter. The color. Then use the next upper gray, the upper one, and done. So it's brighter than the former. Then F again, F plus moving average. This time around, you set it to 240. Simple, close. Change the color to a higher shade of gray. Then click on done. So this is it. This for 120. This for 180. This for 240. 60 bigger difference. Then the last one is 300 plus F plus moving average. Change this one to 300. Then change the color to a black. Then done. So you see. Now look at it. When you see this gray, they come together and start spreading and separate like this, you will know that the trend will move far. Look at this point. You see something. You see this point that the 360 MA, the 60 MA crosses 360 upwards. You see also that the gray, the 4 moving gray averages started spreading openly. They started opening up. It shows you that now we are in what? It's confirmed that the trend is now an upward trend. You can see. Started going until it got to this point. The moment it goes to this point and the trend correction, 60 MA, this 60 green MA was showing that the trend is no longer moving up again. It has started coming down. So you see, it has showed the correction of the trend that the recent trend correction presently now, the trend is no longer going up, it's now coming down. So this 60 MA shows you that it's coming down now. Do you understand this, guys? It shows you that it's coming down now. So that's how you see it kept on coming down, kept on coming down. See, it's still coming down. Look at since the 60 MA crossed the 360 MA, red MA here, you see price is coming down. And you can see now, the 4 gray MAs are already spreading, showing that. But now, it might likely cover back, but it might continue to come down. You see, as price is moving, all these MAs are also moving. So as the price is moving, they're also moving. Do you understand this? Okay, let's continue. Let's set up. Then press F plus. Now we want to add moving averages, but this time around our period is set to period 4. Period 4. Now for the method, it's no longer simple. The method is exponential. You select exponential for the method exponential, not simple. Applied to, now it's not applied to close, but applied to typical high low, close 3. Typical high, low, close 3. Typical price, high, low, close divided by 3. Apply to it. Then the color for this one is blue, aqua blue. This second row, this one, second row, 1, 2, 3, 4, 5, 6, 7, seventh column. And first, sorry. Oh, what am I saying? What am I saying? 1, 2, 3, 4, 5, 6, 7. Seventh go second column. Seventh go second column, please. Seventh go second column. Click on done. This is aqua blue. So as you can see, this is aqua blue. Can you see the mark here? Can you see where it is marked? That's the color. Please note that you see the one that is marked. That's the color. Then done. Then the next one. Now, what's the function of this aqua blue? Aqua blue. What's the function? Now, the function basically, it tells you. It used to tell you when to get ready to exit a trade. It tells you when to exit a trade. It tells you when to exit a trade. Now, if you see, look at when the thing was when the trade was bullish. Look at everything was going on, but the moment you see it curved down, this aqua blue curved down, it sells more a bit. It tells you when to exit. Assuming you were just scalping from here to here now, from this point to this point, you'd have stayed in the trade. From this point, just crosshair. You keep your crosshair down, maybe here. From this point, maybe you entered at this point. When you got to this point where it started curving down, you can exit the trade. Do you understand that? You can exit the trade there if you are scalping. But you will, as we continue, you will understand that you don't need to really do that. You see, when it curved down, you see, when it curved here, when the aqua blue curved there, you see, it started selling. And it's selling up to this point. Then it started buying. It's a confirmation that okay, it's no longer selling. It's already buying. Now look at. See, from here when it curved up, see, it has been buying. It will keep buying. It will keep buying until it curves back down again. Do you understand that? That's the function of that aqua blue. So let's continue. But we see another one. Now let's add on that MA that will confirm for you whether to exit or not. Then the next one is moving average. Moving average set to 14. Moving average set to 14. Period 14. Also exponential. Now also typical high, low, close price divided by 3. But this time around the color is magenta pink. Magenta pink. Fourth row, fourth column. Fourth row, fourth column. Let's do fourth row, second column. This. Fourth row, third column. Let's use that one. It's brighter a bit. This is it. This is magenta pink. This is a very, very powerful indicator. Very powerful. For higher time frames, when price get to this indicator, it ranges. On higher time frame, when price gets to this indicator, price ranges. Let me show you that to you on higher time frame. Let me see D1. No, let me show you on D1. As you can see here, at this point, when price got to this point, you see it start ranging. Likewise here, as you can see, at this point. So it's a very powerful point. Very powerful point, you see. You see here. You see this 4 hour. Anytime price gets to that pink can be very powerful. Start ranging. So what's the function of the typical of the moving exponential moving average 14? The function is used to tell you when to get ready to re-enter or to scale a trade. It tells you when to re-enter or to scale a trade. Look at, see, every time at this point where the 14 EMA and the 4 EMA crosses, it shows you that now, as it is at this point now, it shows you that this buy will continue for a long time. You see, whenever they cross, it confirms, okay, that, oh, you can enter now. You can enter now. It shows that you can re-enter now. You see, when it crosses like this, it shows you that you can enter a sell. When it crosses like this upwards, you can show you that you can enter a buy. You see, this one will go up, you buy a bit before it starts reversing again. So it's a confirmation signal. On a higher time frame, on a higher time, another time frame like 1 hour, you see. Look at when they cross there, you see, it bought for the next 2 hours, 1, 2, 3 hours, it bought. So look at when it crossed downwards here. When it crossed downwards, you see it sold 1, 2, at least 3, 4, 5, 6, sold more. So it's a confirmation for you to re-enter. Once you see that cross, you can enter. I will give you the checklist on how to enter, and you will not to enter with when you see these things play out. Are you getting this? Okay. Let me continue. And the next what do you call it? The next MA is most very important MA is the two SMA. So you set the period 2. Now this time around, it's not, the method is simple, but the applied to is typical price HLC divided by 3, and the color, simple rather, and the color is yellow. 1, 2, 3, 4, 5, 6, 7, 8, 9. The 10 to second column yellow, and done. Powerful. Now let's go to D1. What's the function of this 2 SMA? Very powerful, very important. It is used on the daily to tell you the daily momentum. Now look, when I enter this trade, this yellow, look at the yellow 2 SMA was below the candle. It was below, and the candle was bullish, was green, was bullish when I entered this trade. But now, as you can see, because price movement, the candle is now above the green. So if you see that, if these 2 SMA is above the candle, and it's showing if it's a bearish candle, it's a red candle, it shows that particular day, the trend for that day will be a sell. But for this now, very soon, this candle, the green candle will move above this yellow 2 SMA. It shows that what today's trade will be what? Daily. The daily trend will be what? A buy. Do you understand I'm bringing up? Likewise, you check it out on H4 4 hours. You see now, on 4 hours now, you see the 2 SMA is below. Look at this point. It's below the price movement. So the daily the momentum of the next 4 hours from this confirm that it will be a buy. It will be a buy. It will still buy for the next 4 hours. It will still buy. So that's the function of that yellow SMA. If market price is below the yellow SMA on the daily time frame, the momentum is selling that day. If the market price is above the yellow MA on the daily time frame, the momentum is buying. Do you understand this? Okay. Let's continue. So that is the setup. That's the setup for how to trade this. Then I will do another video. Okay, let me just finish up. Also, now we have to add the stochastic oscillators to complete the total setup of this. The stochastic oscillators. Now, to do that, you press F+. You click on this. Then you go to oscillators, stochastic oscillators. Then the first is percentage K period 9. The next is 6, slowing 1, low high, simple. Then the color, the main is red and the signal white. Then you click on done. So this is it. You see? Then to add the second stochastic I'll be using, you click on the F symbol. Now you scroll up. Now you click on the F plus on the second window indicator 1. Window indicator 1, not the first, not the main chart. The indicator window 1, please, so that it will overlap. The stochastic will overlap. So you click on +1, F1 or F plus rather. Then click on stochastic oscillator. Then this time around you change the percentage K period to 5. The D percentage D period to 3. Then slowing 1. Low high. Method simple. Color, the main signal color is yellow and the signal green. And click on done. Voila. This is what you have. So what's the function of this? This will tell you, it will help you to know when to enter and when to exit a trade. Very powerful. Then the next one indicator, commodity channel index. Press on F plus. Then you scroll up in the indicator window 1, click on F plus. And then you find commodity channel index is under oscillators. Click on it. Then you set the period to 60. Typical, apply to typical price, high, low, close, divided by 3, and the color is black. Then click on done. So this is it. Now let's go to daily. Observe something here. Every time price gets to this point, anytime price the red gets up to this point, let's go back a bit, gets above 80, up to 80 or above 80, and crosses downwards, and the yellow stochastic crosses the green stochastic, the trend for that daily has reversed. Now look at it, has been buying since from this point. It has been buying day 1, day 2, day 3, and it continues to buy. But when it got to the point above 80, and the stock crosses the green, it tells you that the trend has reversed. That's the power of the stochastic. That's the power of stochastic cross. Very, very important. So, very, very important. See, remember I told you that when price gets to this pink, it ranges. Look at the range here. Look at the range here. For some days, it range around this axis. So, then finally, on the main chart, you have to add the Bollinger Band. You click on F, the main chart, you press F plus, then click on, you see trends, you put Bollinger. You click on Bollinger. You just change the color. You can change the color to any color you like. I use the dark brown. First row, 7th column, then click on done. Then voila, see, so this is Bollinger. This is the Bollinger Band. They are very powerful for you. They can help you to know the trend. They can help you to know when retracement is over. Very powerful. So you can read up on Bollinger Bands and all that. So guys, with this, you have set up your chart to start trading VIX. I will send you the checklist and what to check a trade example on how to trade with this strategy. Cheers.